Yeah, so I wanted to start out in a different way, and I was thinking about possibly Kashop and us and myself doing this going forward, which is starting out with like a little bit of trading wisdom. I think that that's something that's overlooked quite a bit in markets is the fact that like everybody wants to know. Like once again, we could get on here every single week. We could talk about nothing but the calls we make. People would be excited about that. People would enjoy that. Hey, buy this. Hey, sell this. Hey, look at how good I did. People like stuff like that. However, that's not how you make money as a trader. How you make money as a trader is very different. And I really enjoyed this from Steve Burns. Steve Burns posted this. It's taken, I think it's out of the Market Wizards book because Lipschitz was a Market Wizards as well. Had really good returns, really steady returns for many years. But the quote goes, "I don't think you can consistently be a winning trader if you're banking on being right more than 50% of the time. You have to figure out how to make money being right 20 to 30% of the time." Now, I want to break this down a little bit today because we've had, I always every time I post something like this, and like it's every single great trader has said something like this from Druckenmiller, Soros, Paul Tudor Jones says basically I try to be right about 20% of the time, then I can basically be a buffoon. There's a bunch of quotes from these great traders, and everybody who's a trader argues it, goes, that's not gonna work. It's very hard to do that. And I'm not saying like, and here's the actual fucking truth. Trading is hard. Taking losses is hard. Walking away from winners is hard. Kashop had a great call on Bitcoin. Changing your mind is hard. So like, Kashop was talking about he's been out of Bitcoin for a while. He didn't want to buy it. He didn't want to own it again for a while. And then he saw an opportunity, changed his mind, made a great post. We'll go over that a little bit more today. Like these are all hard things to do as a trader. So taking losses is hard. Now, I'm not saying you're going to go into every year and you're only going to be right, 10, 20, 30% of the time. I'm saying that you want to plan for that and structure your trades that way because there will be years that your win rate will drop to a crazy low point. That's also okay. Your win rate will drop to a crazy low point, but if your winners are still outpacing your losers, you can have some good years like that, or you can even have some decent years or flat years like that. That's also okay. But over time, you're going to have those streaks where, like, you're going to have a year like for myself last year, we had this crazy high win rate. I never usually have crazy high win rates. I'm a long term trend following trader. I'm looking for these big outlier moves. Most of the time, my win rate's around 40, 50%. That's fine. We have returns, we have a CAGR about 70% currently. So we do have really good returns year after year, even with that win rate. Then last year, coming into it from a different perspective, last year we had a very high win rate and it was my best returns ever. So, a lot of people disregard this, but what they're saying is very important, which is if you set up your risk to return the right way, meaning if I have, if I'm only losing 1% of my portfolio on my losers and I'm gaining up to 5%, now it's not always going to happen, but sometimes you're going to gain 5% of your portfolio or more on your winners, then you only have to be right about 20% of the time. So that's kind of what he's saying here is not that you're going to only be right 20% of the time, but there will be periods of time. There will be like everybody has a bad month as a trader. There's no like I've sat on many trading desks. I've talked to many traders over the years. Every single person has bad periods of time, bad months, bad quarters, bad years. So how do you handle that? Well, if you're basically taking these small losses and your drawdowns are small and so on, you're at a pretty good point. So setting up your risk to return, understanding that I might only be right 20, 30% of the time will make money. And my last part on this is if Kashop and I get on here today, and let's say Kashop says and me, like, we're making a big call. This would be a big call on normal financial media. And this, it's fucking nothing because we're actually traders. We don't care at all. But let's say we got on here. We're like, Kashop, I got a big call for you today. The S&P 500 will be higher by the end of the year than it is today. I'm probably right, most of the time. That's not every year, but most of the time I'll probably be right. And then I can get on at the end of the year and pound my chest and tell everybody how amazing that call was about the S&P being higher. at the end of the year. But the difference is, how do traders trade it? And this is where your win rate, your risk to reward, and all this stuff really matters. How do you trade it? So if the S&P 500, like for example, COVID year, you could have came in the first month of the year in January and said the S&P will be higher. You were damn right. But at the same time, you had to endure like a 30-40% drawdown. You had back to back 10%, 20% down days. I mean, it was pandemonium basically here in the markets. Every stock got cooked, every single asset got cooked as well. The dollar went up, went down, bonds went up, went down. I mean, it was a wild time. But once again, at the end of the year, you were right. Does that really matter to traders? No, because like as a trader, like I was, going long, like I was long a couple things into the beginning of the year. Those started to fall out. Next thing you know, I'm short a bunch of things. I make money on the short side. Next thing you know, it starts to go back up again. I get stopped out of my shorts. I'm basically in a flat period until, I think it was September, October. October, we made a little bit of return, nothing great. Then the last 2 months of the year, it was back-to-back 50% months for me. So, that's how trading actually works. So like you're going to have like losses more than, being able to just sit there and hold. Like, is anybody really as a trader, like sure, long-term investor, buy and hold people. Can you sit there and hold like, the S&P 500 for a year? Sure. But at the same time, as a trader, you shouldn't be holding anything that's having a 20, 30%, 40% drawdown, especially the S&P 500. It better be the most volatile asset in history, like something like Bitcoin, natural gas. Maybe you have a stop that wide, but the S&P 500, anything above 10% is very abnormal. So if you have that period of time, you need to get out of the S&P 500, and then you possibly would go short, then you possibly go long again, and then you're making money into the end of the year. So once again, that's the difference there, is that there's going to be some losers, there's going to be some winners, because you're trading in and out of things. You're not just making a big call. So understand these quotes. I think they're fantastic. I think the fact that some of these people are so open about that fact is something that goes over so many heads in the market. And I think that's an important thing that, new traders need to just understand, look at, and change, because it's okay to be wrong. Like, I think everybody starts trading, including myself. I don't know if you felt this, Kishap, but when I started trading, I was sitting there and going like, I got to be right. I got to create systems to be right. Like, I'm going to have this 100% system. And if I put 30, 40 indicators on my charts, I'll be right every time. If I understand every macro landscape, I'll be right every time. If I understand the fundamentals completely, I'll be right every time. And the answer that every single trader will tell you, like, it's the thing that Schwager always talks about. What are the consistencies across traders? Same with George Coyle. What are the consistencies across traders? It's take small losses and let your winners run. Like, that's the main consistency you'll see over and over again. Position sizing matters. These things all matter. But that's the one consistency that you really have to pay attention to, and then create strategies and systems around it. I don't know if you have anything to add on that, Kishap. I want to get your call, but do you have anything to add on that?
No, I think you nailed it. So, I mean, it was my experience as well as a new trader. So, when I first started doing technical analysis, I think it was around 2018, 2019. Every chart I looked at, I saw a head and shoulders. And why? Because that's the most visible pattern. That's the easiest one. And then once I started adding RSI and trend lines and everything, then I was like, yeah, my charts were pretty cluttered. But here's the thing. I think that's kind of the evolution, because my charts went from being extremely cluttered to basically just candlesticks with no indicators, because over time my mind got trained to just seeing the patterns without needing to draw lines, without needing to add statistical indicators to the chart. So I think it's probably an evolution. So, if you are new, I would say, no one's going to mock you. You do your charts your way, and over time, see if you can declutter it. And I think that way you will get where you need to get to. And of course, not everyone's going to be minimalist with their charts. So if you have a style, make sure that it works for you. And then I think that's the most important thing. I think, like, you have to be true to yourself. So if you're the
Yeah.
kind of guy who works very well with a cluttered desk in a cluttered room, then maybe clutter on your chart doesn't affect you. But if it's a style. So for me, it's not that way. I really need the minimalist look, so I keep my charts the same way, and that works for me. So overall, I think, yeah, if you're looking for a 50% win rate, 60% win rate, and you're only going to take, say, 10 or 12 high conviction trades a year, like a private equity fund, then that works for you, but then you're not a trader.
Yeah.
So if you're a trader, then that's not the approach that you need to take. But if you're not a trader, there are still other parts of finance where you can have a career where you can be right more than 50% of the time, where you can be right probably 80% of the time. So if you're buying bonds, for example, you really have no room for error if you're buying bonds. So then
Yeah,
you're
buy and
probably right
hold
90.
investors, buy and hold
Yeah.
investors, bond investors. Like, sure, it's just like trading is just a very different thing, and that's the biggest thing people need to understand is trading is different. It's gonna be tough. There's gonna be ups and downs. Even on my time frame, I'm longer term. It's still gonna have a lot of whipsaws, ups and downs. Like no matter what you do, you have to understand that. It's part of the reason why I'm not a short-term trader because I always watched the day traders and then the weekly traders and then the monthly traders trade at the firms I worked at. I would watch the pain they would go through from time to time, and I kind of started to think, well, nobody's really looking at the quarterly time frame. And then if nobody's like, and then only a few people are looking at quarterly, people are definitely not looking 6 months to a year. And so you kind of find these edges in that, but also that has, as to Kashop's point, that has to match your personality, your strategy. Long term matches my personality, my strategy, the way I like to do it. That doesn't mean that has to be the way everybody likes to do it. And I like the fact that there's a comment here. Taking losses was the hardest thing for me to do. My ego, etc. But when I realized making sure losses are small and get back in if it comes back was the hardest thing for me. That's true. Everybody starts out with a big ego as a trader, because like you have to. That's something that nobody wants to say. Like you have to come in and have this cocky ass attitude and think like, oh, I know something about this. Or for me, it was simply like, oh yeah, I kind of know a little bit. I had this uncle that told me some things, and then I got in, and one day I remember buying something and I made like, $20 in like a minute. And I was like, oh my God, if I could do that all day long, I won't have to work. I mean, it's just like crazy thinking. And then it was like, I'll just guess the weeks right perfectly. And then I'll guess the days right. And then, you have all these crazy ideas, but in the long run, it's all about, you know, going through that process, as Kashop said, having all the indicators on your charts because it's good to learn. Like I can't talk about all the indicators because I just read about them. I used to have all the indicators on my charts as well. It just takes over time, and then you go, what do I really need to put on this trade? And then you're kind of changing it. And as you guys see, as the years have went on, I'm very much line charts or long-term charts in some sense, sometimes candlesticks, looking for breakout buy signals, Bollinger Bands, Donchian channels. I'm not really a ton of indicator guy or even a indicator guy for the most sense. I really like to look at the price action. But I want to hop into a couple things because Kashop made a really good call on this show a couple weeks ago. He put out a great report. And so, Bitcoin has been basing for a while. Nobody was really trying to say, hey, this is the bottom. This is exactly when to buy it. Even myself, like I wasn't looking at it. I obviously always wait for something to happen, either a price level to break or something to base out after. Kashop called it right damn near the lows. So let's go through your thought process a little bit. How'd you do this? I know you brought this on the show. I know people had a chance to get into it. I know a lot of people, even in the chat today, people said, hey, we got into that trade because of you. So explain your methodology, your thought. DPS was one of them. There it is. Not going to lie. Happy I listened to Kashop, the Bitcoin call by Kashop. So go through your strategy here, go through what you were thinking, and go through where we're at currently.
So I've been in Bitcoin since 2016. I finally got out in 2024 and said I'm done because the way it was moving, it was very different from the cycles that I was used to. It was more institutionalized. I mean, the old Bitcoiners used to say, "Now the suit coiners are here," and it was kind of a derogatory term, but they pretty much the institutions when they came in, they changed the price action. They changed the way the market moved. They changed the way. people interacted within the network. So at that point, I said, I really don't have any ability to predict where this is going to go next. I see a problem with the fundamentals and I'm getting out. And I pretty much didn't change my stance for the next 2 years. Then the Iran war started, and I saw that right after the war started, I saw this spike, and that was due to people in Dubai. So you see the crypto crowd in Dubai, they came in with their crypto money and they were taking it out through the crypto money. Not that there is any problem with the bank. It is just that when you have crypto that long, you're more familiar with how to move money through crypto channels than through the regular financial channels. Plus, it's your comfort zone. So I saw that spike and I noticed that was interesting, but then that died right after and it was just stuck in this wedge pattern. So the next bit of fundamental news which came up was Iran saying that we are going to take $2 million per vessel as a toll and we are going to use that to repair our infrastructure. And they said that they prefer the toll payment to be made either in crypto or through Kunlun Bank in China. So yes, the Chinese yuan option, no doubt that was attractive to a lot of people. But for a lot of ship owners, the option pretty much became crypto because how do you deal with a Chinese bank? How do you deal with a currency which has, so for those who don't know, China has two currencies. One is the offshore yuan and the other is the onshore renminbi. So how do you deal with that? And I noticed that the price action in Bitcoin, especially not in crypto, but Bitcoin especially, it was starting to get constructive right around the time this news came out. Now, of course, like if you go into the shipping channels, like all these guys who have been in shipping their whole life, they are like, yeah, ship owners are not going to pay tolls in Bitcoin because, that's a sanction violation and all that. And they had all their reasons to say, crypto is this, that, and all that. But then the price action was telling you someone is accumulating crypto and specifically Bitcoin. Someone's accumulating Bitcoin. Why? Well, this was a logical explanation. And then when you looked at what the institutions were doing, they were also accumulating Bitcoin. I think, in fact, I shared a chart saying that the Bitcoin Fear and Greed Index, which is mostly retail, it was at its all-time low, saying extreme fears. Whereas if you looked at what the institutions were doing, well, they were all buying and they were accumulating quite heavily. So that led me to realize that this is going to move soon and it's going to move soon in a way that's going to surprise a lot of people, which means, so here's the thing, a wedge pattern, if you look at it from a purely technical perspective, it can go both ways. It can break lower and keep going. It's a continuation pattern, or you can say it's going to reverse from here. So I took the call that fundamental sentiment and the technical show that it's going to reverse, and I went long. So from 66K when I made the call all the way until 73K, I've been accumulating, and now I'm just letting it ride.
No, I like it because I think once again, it's we always talk about on here that we have, sometimes Kashop and I'll have differing opinions and we also come from markets at different angles. And I think that's one of the best things about the show is that, and our friendship, we've known each other for a long time. We've always talked through these different ideas with each other. That sometimes there'll be an idea that Kashop will be in early, sometimes there'll be an idea that I'm in early. It doesn't matter, it's just coming from it from two different angles, and sometimes those ideas converge, and currently they're converging. Between Kashop's calls, I completely agree with his idea there, but also for myself and my own strategy, I'm always waiting for us to break a certain level. I posted this today before it actually got above 76, but now it's above this level. So Bitcoin's looking really good. Looks like it is ready to really start moving. And, targeting some of these zones, it looks like really there's a lot of congestion around 90 to 100K. But at the moment, it's like if this thing can get moving, if the fundamentals and technicals keep adding up, and also it doesn't look as bad as it is. And there's a pattern that I talk about all the time. The oops pattern. You get this false breakdown right here. And so basically it breaks down and it doesn't go anywhere. There's a lot of wick down here. Most of the time when you see wick like that, that's kind of telling you that this thing could base out at any point, starts to base out, moves sideways. And then we have a lot of weeks of sideways, which is actually a pretty good sign. And so once you get that, 10 to 20-week high. Now we're starting to hit that zone, and then you start to move higher. So it's like it's a good time to start looking at Bitcoin. And also it's a way, people are like, man, energy stocks are getting hit. It's like, dude, number one, there's a lot of things in markets. It's always going to move. And I think a good trader is going to continue to move from thing to thing to thing. So, you have energy moving, working well. It's not to my stop yet. For example, it came down a bit, but at the same time, it's like we're still sitting on, the pretty big profit in the energy sector still. But at the same time, Bitcoin started to move. So what do I do? Do I sell my energy positions and get into Bitcoin? No, the answer is energy still in an uptrend, primary, because I'm long term. So primary uptrend for energy. Bitcoin's moving into an uptrend. I'm going to have both of these positions. I'm not going to overthink it and go, okay, Bitcoin can only go up if energy goes up and so on. Also, the situation in Iran, even though everybody's going to be like, it's over, this, that, it's not exactly over just yet. So hold your horses. I would think that this is going to be a pretty significant time here. And so for me, it's like the energies positions are still in an uptrend, but at the same time, there's still some volatility in the Middle East currently. And so if we continue to have that, it's like, as long as it's an uptrend, I kind of look at it like a really good hedge. And also it shouldn't be 100% of your portfolio either. You should have a diversification of positions. The portfolio that I put out and against all odds, we're talking about, we're in lots of international names. We're in lots of names across the commodity sectors, whether we're still in some gold miners to silver miners to copper miners to steel stocks to aluminum stocks to lithium. I mean, I could go on and on and on. And these areas are holding up really well while energy is coming back a little bit. Not very concerning, just makes perfect sense considering the volatility in the situation. So I would hang on to those positions. And if you're looking at something to add for diversification, something that will go up if the liquidity keeps going up, which the liquidity environment actually looks good to keep moving higher. So if we continue to see that moving up, we continue to see global liquidity looking the right way. You want to keep diversifying into these other areas. I'm not on here to tell you guys get into the Mag 7 and everything's great. I'm here to tell you guys there is some areas that are looking very good. We've been long those areas. We'll continue to be long these areas. And at the moment, energy is taking a little bit of a nap. It had 14 straight weeks up. It deserves a little rest. And speaking of emerging markets, the dollar and so on, this is a chart of emerging markets. Basically in the red line, we're seeing emerging markets. Was this a bottom? This was the other week when we came on. I made this chart. Was this a bottom? Certainly looks like a bottom. Was that a top? Certainly looks like a top. So I do think the dollar is going to continue to roll over, and I do think emerging markets will continue to move higher. That's been my thought for basically since the beginning of 2025. So Kashyap, what are you looking at in the emerging market space? Is there any countries that are really sticking out to you currently? I know you talked about Africa generally the other day, but is there anything else you're looking at, or is it still mainly Africa or any other areas?
So I'm doing my research on a Southeast Asia stock today. I think the report will be out tomorrow or early next week for subscribers. So I think Latin America has started moving. Africa is going to start moving, but it's going to be really hard to actually gain access. If you want a market where you can gain access, then that's Southeast Asia. Now, Southeast Asia also got a sort of a tailwind today with the announcement that the Strait of Hormuz is now open, because the biggest loser from this war, apart from Iran itself, is Southeast Asia, because uh, they are pretty much dependent on the Strait of Hormuz for all their energy needs. So now that the Strait of Hormuz is open, we are going to have a little bit of relief there. And I think the stocks there are pretty attractively valued. So I'm looking into one which is, I'm going to be publishing the report soon. I'll probably be looking at more stocks in Southeast Asia.
Yeah, I mean, are you looking at Vietnam by chance? I'm just curious because I've been looking at Vietnam quite a bit. It's the one that got away from me last year. It was literally it must have been right before Liberation Day. It got a buy signal and then just immediately just got hammered quickly, and then it went straight back up once again. But I'm always looking at these areas in Southeast Asia. And Africa looks interesting. Latin America looks interesting. The commodity-based countries look really good. So, I think the big thing about it, there was somebody, it was a Cleveland guy. I know his name because he owns the dealerships in Cleveland, Bernie Moreno. Bernie Moreno got on and he was like, we, over the last year, the US is up 20%. What country is doing that? And I was like, Jesus, like every country is, 50 to 100%. Europe was up over 100% from last year currently. So, I mean, there's a lot of these countries that have done this type of return recently. So I think that we continue to, people in the United States, I mean, globally, like, you're one of the ones who kind of got me thinking about this differently because it's like everybody has a home country bias. And I think that's bullshit. I think the answer is actually everybody in the world has a US bias because it did so well all these years. So they want to continue to be in the US. And international is outperforming. There's a lot of international stocks that are outperforming. Emerging markets are outperforming. Latin America is outperforming extremely. Just look at the ILF ETF. Africa's outperforming. Southeast Asia is starting to move. So we've got a lot of areas where we can be in currently to make a lot of money, and you don't have to just sit in the S&P 500 and be like, well, the U.S. is always going to win. I mean, it's just not true. It doesn't always win, and especially in an inflationary environment, and especially in an environment where the dollar is moving down. So be ready for that. Continue to move around. And that's the thing. Like, don't expect everything to go up at the same time either. Like, you should have a diversified portfolio. You should have some emerging markets. You should have some energy. You should have some, like, all of these things that are in uptrends. You should be in some of them in a lot of different areas. And this way, when, energy is going up like this and nothing else is, my portfolio was holding basically flat. I mean, because nothing else was moving. Everybody's like, oh man, you had the oil trade. I'm like, yeah, it did all right. It did great. It did what it was supposed to do, but it literally just held up the portfolio without a drawdown during that time. And that was it. And then now it turns into, okay, now the rest of the portfolio is kind of moving. If we're looking at emerging markets, mining stocks, aluminum, lithium, all of these things and so on, like these are all moving very nicely. So now it's like, okay, I have this balanced portfolio that's going up. The international names are really dragging those higher very quickly. So once again, it's try to diversify your assets. And that's the best way to make money as a trader. So you're not just stuck in one thing wondering, hey, why isn't energy moving? Or why isn't this drawdown in emerging markets? Why aren't emerging markets moving? There's going to be times for everything to move. And I think this year we're probably going to see emerging markets go, and then they'll slow down, and then energy will go, and then it'll slow down. And I think it's just going to kind of go back and forth. So just be ready for that. Brought one commodity that is a little bit that not a lot of people trade, but damn, it is making a big move. I trade this one. I don't really recommend it. I had somebody get stuck in a position because they bought the contract like 3 years out a long time ago. So I really don't. Some of the trades that are very illiquid, you will not see me recommend. Cotton isn't exactly a liquid, but most people don't trade it. It's not really readily available for most traders because it's in the softs market. So, but looking at it here, we kind of have this big move in cotton. Cotton looks really good, starting to break out. What do you think about cotton and China, Kashyap? Because I remember like China and cotton were very hand in hand for many, many years. And, when China was moving, cotton was moving and so on. And now recently that seems to have changed quite a bit. But cotton is starting to make a move. Have you looked at anything about the cotton market? Have you seen anything about it? Because I'll be honest, I don't look at the fundamentals for cotton very much either.
So I'm not I haven't followed cotton either. Like I remember you brought it up, so I kind of added it back to my watch list. But nah, I am not really aware of what's happening here.
Yeah, just think once again, I think it's just part of the commodity cycle, the way it's going to continue to work, which is running from one thing to the next thing to the next thing. Like everybody wants to think commodities, super cycles, and all that are just like, I'm going to go buy all these commodities and go sit on a beach for 10 years and come back. It's going to be awesome. You probably have a bunch of margin calls, honestly, but really what you want to do is take them one at a time. Copper is making a great, it's kind of the reason, like, this is the thing that I think people don't understand about portfolios a lot of the time. It's like sometimes people see all these things get chopped around. Copper starts to go. It's like looks like crap. But then you're like getting into long positions in like, let's say, oil, agriculture, like wheat, soybean oil. And basically, let's say, like, the metals trade slows down, the stocks you're long start to slow down, semiconductors start to slow down, everything slowed down at some point. But then you have this other thing. Okay, now I have this energy trade that's moving. I have cotton that's moving. I have these other things that are moving. That's a reason why you continue to put on these positions going forward and don't just get stuck in like, hey, I know this is supposed to happen and I can't believe this, the war's ended. The war's not ended, every day. Like that's a very bad state to live in. You're living in fight or flight, and that's scary. That's not going to help you as a trader. You got to have a calm, cool personality and get into and out of these positions, and that's going to be the best way for you to make money over the long run, instead of just looking at it and going, oh well, this has to be this because I believe it. Markets love to make a fool out of all of us. And so looking at the cycle, I thought this was interesting mainly because of copper. And so we'll talk about copper a little bit more later, but copper is now hitting another high. While oil has given quite a bit back currently, especially in the front month contract, the later contracts in December and so on do not look that bad, which tells me that this has probably still got a little bit further to go. I don't know like how consistent that will be, because I think everybody's looking at oil as always a geopolitical trade. Once inflation starts to take off, I mean, it's also very psychological. And like, Powell said that a while ago and people thought it was crazy. But at the same time, inflation is very psychological, where if you start to see higher gasoline prices and so on, people panic, people get worried about it. Then they start to actually care about inflation. Then as inflation continues to move higher, they start to protect themselves more. They start to take money out of other things to use it for the things that are inflationary, or they stop driving as much and they do less. This is how we get that stagflationary cycle. So as the prices continue to move up, we start to see more stagflation. Currently, the market looks like it's rolling towards more reflation, where everything could catch a little bit of a bid. Long run, though, over this year, I do think we're still headed towards stagflation. I do think we're going to have nasty inflation. I think the numbers for the CPI are just going to get worse and worse, and I think people are going to have to really start paying attention to that. So, Kashab, stagflation and so on, when we're looking at that, what are you thinking now about the whole idea of stagflation and how people should be positioned? Also, Freely asked about what people should be at. Like, we'll answer this first. What should people be looking for in Africa? Buying individual stocks or buying the AFK? I think AFK is pretty illiquid. I'm not sure. I have South Africa ETF and a couple South African names for miners, but Kashab's probably has a lot more knowledge on that subject. So go ahead.
So if you're buying individual stocks, the easiest place to start is with the banks. So I would start with the banks and go through the list and figure out which stocks I would like to hold for the next 2-3 years at least, because this is a dollar cycle and the dollar cycles last a long time. So you really want to have positions which can give you that secular uptrend. Now, let's say you buy a mining stock. Okay, great. Now that's a call on the commodity price as much as the country. So when the commodity stops moving, then your stock is going to stop moving. And that's pretty much what's happening with the energy names today. So you want to buy the banks, you want to buy something like, say, telecom, which will benefit from the region getting wealthier. So you want to make these consumer bets, you want to make the secular bets in that region. So I would say that's a good place to start. As for the problem with Africa, especially individual stocks, is getting access to actually trading them on the exchange. I think that's where from idea to execution, there's a gap. So you need to look at that. I'm not an expert on that, so you have to do your own research there.
Yeah, I think that's well said. And so let's continue to move through the list. We'll get to bonds in a second. We do have this one. Kashap, could you explain why today's announcement of the Strait of Hormuz opening would only be temporary, or would only be a temporary sign of relief?
No, if it's made into law, or let's say that the ceasefire agreement is extended in perpetuity or extended for, as good as perpetuity, like say the next couple of months or maybe the next year. So in that case, then it's going to be a huge sigh of relief. But if it happens to be temporary, then that's the problem. So the 20,000 seafarers, whoever is stuck there, they are going to get out. Whatever cargo can get moved in that time frame, that's going to get out. And then if we go back to status quo, which was the status quo during the war, if we go back to the Houthis blocking the Red Sea and we have Iran blocking the Strait of Hormuz. So if that happens, then it's back to chaos again. So I'm not saying it's going to be temporary. I'm just saying that if the ceasefire and if all these negotiations they are all temporary, then we can only breathe a temporary sigh of relief and the problems don't stop.
No, I totally agree. I think the thing that a lot of people aren't thinking of too is like, let's say there even is a fully signed agreement at that point. All that has to happen is anything, anything. I mean, the ceasefire came out. Israel striked Iran. Supposedly, I'm not sure. I'm not over there. I don't know exactly what happened, but that's supposedly what the news came out immediately after. I mean, all that has to happen is something here. Not to mention, go check out the traffic in the Strait of Hormuz. It doesn't look like it's moving like it was. So, like, that's another thing that you have to think about. Who exactly are they letting through there? Is it everybody once again? Is it going to be as consistent as it was before? Are they going to be more selective? Not to mention the supply disruptions that continued to happen. Like, yes, they're going to dump a bunch of oil at some point, but there's also going to be supply disruptions going forward where refineries coming back online, certain things that have been shut down, and so on. Once that happens, that's also going to be another a little bit more fuel to the energy fire. So energy could go a little bit higher at that point. Like Kashab said, and Kashab said it on the show a couple of weeks ago, and we talked about it here. I understand that once that happens, there's going to be a give back. The long run, though, however, I do not think that's going to end. I do not think the energy trade is over. I just think it's going to take a break. I think that ignited the start of it. It's kind of like saying, like, hey, COVID, um, oil prices went negative and tankers were overfilled and blah, blah, blah. So that means oil prices will just continue to go lower forever. That would be completely wrong. That was the bottom, continue to move higher. So I don't doubt that, like, we get flooded currently, all these things happen, but in the long run, I think that it's probably headed higher. I think that shipping stocks are probably headed higher, probably sooner than the rest of the energy space. So I think that looks good. So there's a lot of areas to continue to check out in these markets. We'll get to TLT. Actually, we're getting to TLT right now. So we're looking at copper and the 30-year treasury yield. And the 30-year treasury is just hanging out up here. Yeah, it came back a bit today. Everybody's going to write me and be like, dude, TLT, it's got a green candle. No shit. Every other week it has a big green candle because as it should. People should if you go back and you think about the last 40 years, what have people continued to invest in every single time they think anything's in the world's happening? They think, some way to diversify themselves, all of this bullshit. Like, where do they go? Well, they go to TLT, they go to bonds. So people are going to buy bonds at periods of time. I do not think that is, I'm also long some put options on TLT. I do not think in the long run this is just going to go higher. I think it's going to break down. I would have loved to wait for the breakdown. However, when you're buying a put option, you want the volatility to be low. Volatility is extremely compressed. The volatility is extremely cheap. Buying puts for more downside on TLT makes a lot of sense, especially when you know that the CPI reports are going to come in hot. They can't come in anywhere but hot. So if inflation keeps running higher, and that's the thing, I don't care about where gasoline prices are. Let's say gasoline gets an average of $3.50 in the United States. That is still very high compared to where we were at, which is $2.50. So, that big move in gasoline prices, not to mention copper has moved, not to mention gold, silver, and then the inputs cost for all of the products that we use day to day, from phones, computers, and so on, cars, have gone up a ton. Steel has gone up. Aluminum has gone up. Everything has gone up. Those input costs are going to start to show up in the CPI report soon. When all of that happens, which is could happen any day now, you're going to see a lot of pressure on the bond market. Copper is already telling you something, and that's the thing about copper, is a really good indicator of where bonds are headed. Yields are headed higher. Copper's headed higher. So copper continues to hold higher. These guys kind of follow each other, whether it's a 30-year treasury yield or copper, like they follow each other. You'll see there's, sometimes one moves first, sometimes one moves second, but they're always catching up to each other. And I think now's the time you really want to start to pay attention to the fact that copper is hitting highs while yields are struggling and bouncing around. Even today, like, copper is kind of shrugging off the fact that bonds are up so much. So I think that this is an area that you want to continue to pay attention to. I think you don't have to short bonds like I am, but you can also buy copper stocks, buy things that will benefit from inflation as yields continue to move higher, which there's not many things. Like, at this point, with yields as high as they are, that's going to put a lot of pressure on the market if we start to see that above those highs. And so, Kashop, I wanted to pass this to you. So if we're looking at 30-year treasury, the Fed funds rate, what do you think about the Fed currently? Do you think the Fed's going to just continue to keep rates flat, or are they going to move them up or down? What are you thinking currently?
I think they want to keep cutting, and that's just based on their history. So the thing about the Fed is they say they care about inflation, but they really don't. What
Yeah.
Because they are completely captured by the commercial banking system. And what does the banking system need right now? Well, it needs lower rates. And why does it need lower rates? Because you saw what happened the last time the Fed hiked rates. So 2022, Fed went on an aggressive rate hike cycle, and the bond market pretty much collapsed. And all these banks, which were long a bunch of treasuries, they went to the Fed and cried uncle, and they are like, hey, you have to start cutting rates because we cannot survive in this environment. And you saw big Japanese institutions start to sell US treasuries because they were sitting on huge amounts of losses, and they kind of had to do it in order to stem the bleeding. So whenever the Fed hikes rates, the bond market gets in big trouble. The big institutional holders of these bonds call up the Fed and say, you have to cut rates. And now we have the president who is pretty much saying the same thing. Now, in 2021, they had the audacity to say that inflation is going to be transitory, and therefore they don't care. This time, I think they'll probably, like, just like they have renamed QE into Reserve Management Program, they'll probably come up with some reason. So if you look at what happened during the Vietnam War, for example, the Fed cut rates and started printing money. Why? Because the government told them to. So you're going to have a situation where they're just going to abandon all pretense of fighting inflation and just say that we are going to print. And there's nothing going to stop that. And that's probably why you really do not want to own bonds, because although you may make you put $100 in bonds and let's say it yields 4%, you get $104 back. But those $104 are probably going to buy almost nothing. Maybe it's going to buy $80 worth at that point. So you really don't want to be long bonds, because the Fed is just going to print and print and print. And if you look at the US M2 today, you can already see that happening. If you look at bank deposits today, you can already see that happening. If you look at the amount of money in money market funds, you can already see that happening. So every indicator that you look at tells you that the Fed is printing, tells you that liquidity is going up. And in this environment, you do not want to be long bonds. But that said, I think there's a case to be made for being long the 2 year Treasury futures. And that's a position that I put up, I think, a couple of weeks ago. And the reason for that is when we get a sell off in stocks, when we get a sell off in oil, I think we are going to have a temporary up move in treasuries in specifically the short term. I don't want to trade the long term because I think long term, you really should not be holding them. But I think the short term, there's a case to be made that we are going to have a tick lower in yields and your bond futures are going to go up, mainly related to the ceasefire news and a imminent stock sell-off that's coming. And Why do I say there's a stock sell-off coming? Because we have had 13 up days in a row. Maybe we get to 14, maybe we get to 15, but after that, there's going to be an air pocket because nothing moves forever in a straight line and parabolic moves don't last. So when we get that sell-off, I think we're going to see a rotation into bonds. And for that particular period, I want to be long, but in general, I want to avoid bonds because I think like you said right at the beginning of the show, it's a stagflationary environment. It's people are not realizing it yet, but and maybe US is more insulated to the stagflation than the rest of the world. But if you look at it from a global perspective, and that's pretty much what macro is, I think the entire world is in for a huge stagflationary crisis this year. It's probably 20-30% of the world is in for a major food crisis this year. So in this environment, you want to be long commodities and not long the bonds. But right now, I think there's a sweet spot where you can trade the 2 year on the long side.
I think the short term, like the short end, I am still long the 3 month. I wouldn't trade the 2 year, so to say, myself personally, just because looking at the 2 year, the Fed's kind of losing control of the whole bond market. And I would like to be where the Fed has the most control. And the most control is going to be in those 3 month futures. Now, once again, most people on here, Kashyap and I trade the futures market. You guys don't trade the futures market, so I know most people don't have access to that. If you started to buy shy and short TLT, you're going to be like, I'm not making anything. And that's true. But if you have futures, you have access to a lot of leverage. The leverage basically makes you able to make a bunch of money. That's why you guys hear about these crazy, like Druckenmiller, I think it was 2000, bought bonds and made a ton of money. And a lot of people would be like, how is that even possible? Well, the answer is that he has access to futures. So getting access to futures is a really good thing. If you have enough money to do so, I suggest everybody do it. But yeah, so want to end on this one. This is basically the look. You could say growth to value. There's a million ways to look at it because the charts all look very similar. Even though growth to value is a little bit different, the charts all look very similar, which is the NASDAQ 100 against the small cap index. So if we're looking at the small cap index, it is finally looking like it is getting a little bit stronger. It rolled over right around the time of the Iran war, really more rolled over through the Venezuela event. Once the Venezuela event happened, next thing you know, the Iran war happened right after that. And this thing's been rolling over and accelerating to the downside ever since. It looks very similar to this one, which is the Venezuela-Iran event happens. Next thing you know, oil is massively outperforming. Stocks are massively underperforming. And so now we kind of have this bounce here. And the real thought is, does this look, did this go in a straight line? Did this go in a straight line up or down? And the answer is no. You're going to see pauses. You're going to see volatility. New traders would be like, and this is what I thought at the beginning, well, I'll just get out right when it goes down and I'll get back in right at the bottom. And I'll just, it's like, I wish there was a strategy and system that could do that. However, you're not going to time every pullback. You're not going to time every top. You're not going to time every bottom. And that's just the truth of trading. You got to wait for your spots and pick them the way you want to do it. Sometimes we can catch bottoms. We talk about like the Venezuela news. I got on here and talked about buying it around that point. Kashyap buying the bottom in Bitcoin. Like sometimes we'll get a couple of those and people will sing our praises. Oh my gosh, they caught these bottoms and they're great. It happens here and there, but it isn't much. Don't bank on it because that's not how I make money in the long run. How I make money is consistently trying to catch the meat of these moves. Meaning, as you see all this volatility in here, like I know that's going to happen. I know I'm not just going to continue to make money, but what do I do if I get stopped out? When do I get back in? Is my stop wide enough to handle the volatility of the product I'm trading, to stay in it within an uptrend and so on? These are all very important things to think about as a trader. Currently, the way I'm looking at both of these, though, is if we're looking at this one, it's basically saying, okay, well, small caps are kind of leading the way. We'll see if the primary trend goes back up and it turns back into the NASDAQ once again. But it seems like small caps are kind of leading the way. If we kind of stay above around these levels and then we continue to roll over, I really want to stay in small caps above large caps, especially. And then on this one, it's let's see where this shakes out. Commodities are very volatile. But if oil starts to continue to move higher, that's something that you're going to want to be in and pay attention to. The situation is very dicey currently. It's not something that we know for sure just yet. It could change on a dime. And once again, everybody's going to pay attention to the news, and it just depends on the way you're trading. Like some people trade on news. I liked Linda Bradford Rashke's quote the other day. She talked about the fact that if you really pay attention to technicals, you'll realize that you don't have to pay attention to the news as much. And I think that's true because it's not that technicals are this all-knowing magical thing. It's that technicals are telling you what people are actually doing. Sometimes people are actually buying things way before the news comes out. I mean, Venezuela situation was a great one to think about that. That should have been, huge oil reserves in Venezuela and so on. And the U.S. takes it over, and every reason in the world to think, man, now oil's going to go lower immediately and it's going to be nasty. And then it didn't break down, and then it didn't even go down, and then it just kind of sat in that zone, meaning there was people coming in and buying, even though the news was bearish. And it's the same thing now, currently today. The news is bearish for oil, but at the same time, we're living in a situation that might not be very bearish for oil at all, fundamentally, technically, and everything that you're currently looking at for oil. Not to mention the futures curve, not to mention supply and demand dynamics. Like everything still looks pretty good for oil. I wouldn't be surprised to continue to see a pullback, to continue to see volatility. But I'm saying in the long run, I think those energy stocks are probably going to end up higher. So Kashop, what are you thinking about the broad market? You mentioned earlier today, we were talking about stocks, and you mentioned, hey, we've been up for many, many days in a row. We're going to see a pullback. What are you thinking? I'm seeing for myself, I'm seeing Mike, and this is where Kashop and I might differ. Kashop will have a view that's more fundamental and macro based than mine. So I'm wondering what he's seeing, because I'm seeing breakouts in IWM. I'm seeing breakouts in IWC, which is the microcaps index. I'm seeing a lot of these areas that I would biotechs look good. A lot of these areas that I look at to say, okay, we're risk on, look good. The liquidity environment looks decent. But you're seeing something different. You're seeing a little bit of volatility ahead for us, which wouldn't be surprising at all. So I'm wondering what you're thinking here.
So if I'm looking at the small caps, I'm bullish on the small caps, and I'm not talking about the indices, but individual small caps. And the reason for this is, if you go back to December 2022 when ChatGPT came out, the big up move, like sure, the index went higher, and sure, tech investors in general and everyone in general made money. But the big money was made by the guys who wrote these mega cap tech stocks. It was not made by the guys who were buying software stocks. It was not made by the guys who were buying, consumer applications or banks. It was not made by people in pretty much other sectors, small caps, nothing. So what happened was when the Max 7 stalled, which happened earlier this year, money started rotating into value. We started rotating into growth stocks. We started pretty much rotating out of the Max 7 into everything else. So the top heavy allocation that institutions had, the top heavy allocation that pretty much every passive investor had, started to rotate a little bit. And now, recently, in the last 10 to 12 days, what you're seeing is a reversal of this. You're starting to see liquidity going everywhere, but it is once again going disproportionately to the Max 7. So, when you think about it in in this framework, in a relative framework, now is the liquidity really going to go back to the Max 7, and are they going to start trending higher relative to the rest of the world, rest of the equity market? I say no. I think this is probably a dead cat bounce in terms of the Max 7 moving higher relative to the other equities, and you're going to see this reverse hard, and you're going to see small caps, micro caps, global equities, anything outside the US. I think you're going to see all these other sectors which had already caught a tailwind from this Max 7 rotation. I think you're going to see them have a bigger tailwind, and you're going to see the Max 7 shrink in terms of the rest of the market. So I think that's going to happen. And this will happen in the backdrop of Fed money printing. So nominally, if you look at your charts in, and they're all in USD. So if you say you're pulling up a chart of the S&P 500 or the IWM, so your denominator is the US dollar. So yes, you're going to see everything go up. But if you're looking at IWM versus the SPY or IWM versus the Qs or individual stocks versus the Qs, then you're going to see relative strength going to those stocks and not go to the Max 7. So I think that's the environment that we are in right now. And within this context, I would fade the move that you see in the big indices. And if you take a look at the price action today, it kind of confirms that thinking as well, because the S&P is up something like 1.2, 1.3%, and the Dow is up 2%. The Russell is up more than 2%. The Nikkei is up more than 2%. So you're already starting to see that the SPY and the Qs, they are starting to show a little less relative strength. And I think that's going to accelerate.
Awesome. Well, all right, guys, I got to run. Got another thing at 11. Thank you guys so much for joining us. Please like this, share this, subscribe to our channels. You know, we're always out here putting these on every week for you guys. We enjoy doing it. We enjoy hanging out together, but we'd love to get it out to some more people. So please do that. And all right, guys, we will see you soon for the Holy Macro Show next Friday at 10 a.m. Eastern Time. See you guys.
Thanks, everyone. Have a good day.